So if you remember from my first video where I explained about how the market makes higher highs and higher lows in an uptrend and then lower highs and lower lows in a downtrend, you should already know this by now. So I'm just gonna make a quick recap. This is your higher high, higher low, higher high, higher low, higher high, higher low, higher high, then a market shift, then lower high, lower low, lower high, lower low, lower high, lower low, and so on. This high got taken out by this high. So same thing again, this high took this high out, meaning this is the new high, no more this one. So this is the new high, then higher low, and then higher high, because this high is higher than this high. And then here we have a market shift. As you can see, this is your market shift. This means the market is about to shift from bullish to bearish, meaning the market is about to go down. When you see this, some like a break of structure to the downside, you don't call it a break of structure, you call it market shift. So when you see this market shift, meaning market is about to change direction, it's about to go down. So this is your lower low, lower high, lower low, lower high, lower low, lower high, lower low, and so on. So like I told you before, in this video I'm going to show you how they really move on the real charts. I'm going to show you all these higher highs and higher lows, lower highs, break of structure, market shift. I'm going to show you all of it on this real charts here. So as you can see, this is an uptrend. How do we know it's an uptrend? It's making higher highs and higher lows, causing break of structure to the upside. So this is your higher high, then higher low, then higher high. As you can see, this high is higher than this high, then higher low, then higher high and higher low, higher high, and then a market shift, meaning the market right now is about to change direction. So let's make a quick recap about this from the break of structure. So these are your break of structure. So these are your break of structure. This is how you know that the market is really moving up, because it's breaking the highs. So this is your higher high and this is your higher low, and this is your higher high because it caused a break of structure here, and then this is your higher low, and then this is your higher high again, and this is another break of structure. As you can see, this high broke this high, so this is the new high. So here is your higher low, because this low is higher than this low, that's why it's called a higher low. And then this is your higher high, this is your higher high here. Then we had a market shift, meaning this market is about to go down. This whole trend is no more going up, it's about to go down. This is your market shift. This here is your market shift. As you can see, the market went down, went up, and then broke this low, which it's not supposed to do if it's really going up. So breaking this low, making a lower low, meaning the market is about to go down, causing a market shift, meaning the market is about to go down. So what do we have after that? This is what we'll expect. Lower high and then lower low, then lower high, and this is your lower low, then lower high and lower low, then lower high again. And what do we have here? a market shifts. So, so these are your break of structure to the downside. So these are your break of structure to the downside. I hope you're understanding this. This is your lower low and this is your lower high. Here is another lower low. Here is another lower high. And here is another lower low. Another lower low down there. And this is your lower high. And there is your lower high again. If you notice from this last trend, it's been going up, making higher highs, higher lows, higher highs, higher low, break of structure, higher high, higher lows, and then we had a market shift here. So this market shift went down, causing a lower low, and then we have a lower high. So we knew that the market is going to go down. Why? Because we had a market shift here. So here is your lower low, lower high, lower low, lower high, lower low, lower high. So how do we know they're going down? How do we know it's a lower low and lower high? Because they are break of structures. So this point we had a market shift here. If you notice, we had a market shift here. The market went up, making a lower high, and then went down, a lower low. Now up, lower high, but didn't create another lower low. But instead, it caused a market shift. As you can see, this is a market shift. Here we have our market shift. So here is our market shift. Why is there a market shift? Because the market didn't break lower. It's about to go up now. It's no more going down. This market is about to go up. So what do we expect from here? We expect higher highs and higher lows from this point. So the market broke, causing a market shift, and then higher high, higher low, higher highs, higher low, higher high, higher low. Again, higher high, higher low. And if you noticed from here, the market made a market shift here, meaning this trend is about to go down. So, making a quick recap from these two, we see that the market has been going down, making lower high, lower low, lower high, lower low, causing a break of structure to the downside until this point where the market made a market shift here. It couldn't break lower, but instead it broke higher, meaning now we see this market shift. We're no more looking for sells. We are now looking for buys. So this is your higher high and this is your higher low. This is your higher high and this is your higher low. Here is your higher high and this is your higher low. So these are your break of structure. So these are your breakup structure to the upside. They are like confirmation that the market is really going up. As you can see, the market goes up, goes down, causes the breakup structure, creating a new high, higher high, and then goes down, caused another breakup structure here, creating a higher high. And then same thing, goes down, caused a breakup structure again, creating a higher high, then goes down again, and so on. So as you can see, the market made a market shift here, around here, but it's not that clear. So I think we should go over to the 1 hour time frame so it could be more open. This is the 1 hour time frame. So this is your market shift, meaning the market is no more going up, but it's about to go down. So the market went up, goes down, goes up, goes down, making lower highs and lower lows. No more higher highs and higher lows. So this is your lower high, and this is your lower low. So lower high, lower low. So what do we expect from here? We expect a lower low, because we had our lower high, and we expect this market from this point to go down, breaking this low. This is your breakup structure here. This is also your breakup structure here. So we expect this market to break this low to cause a lower low. Do you understand? So I will repeat again. This is your market shift. This right here is your market shift. The market goes up, goes down, goes up, but couldn't make a new high. But instead, it caused a market shift and then started going down. So this is your market shift. This is your lower low. This is your lower high. And the market started going down, causing a break of structure. This is your break of structure, meaning the market broke this low to the downside and then retraced a little bit, just like it's breathing in just to breathe out again. So we expect this market to go down, to break lower. That is what we expect the market to do. So this is how the market moves up and down, and this is how the chart really moves. So I'm just gonna delete every single thing here. If you remember from my first video about trading analysis, I told you about time frames. So this right here we just analyzed is the bigger time frame. This is the 4 hour time frame, as you can see here. This is the 4 hour time frame. So 4 hour time frames are bigger time frame. They're like a zoom out of the market, where we just zoomed out the market just to see that, all right, we know what trend we're in right now. Just to know what trend we're in right now. That's why we zoomed out the market. So I'm gonna analyze this chart like in real time right now. So this right now, this is gold. We're analyzing gold. As you can see here, SAU USD is gold. As you can see right now, we had a break of structure. Let's move over to the 1 hour time frame. 1 hour time frame is still a bigger time frame. There's still big time frames. You don't trade on them. You look where the markets are going. So this right here is your market shifts. This means the market is no more going up. The market is about to go down. So what do we expect from here? We expect lower highs and lower lows. So this is your lower low, and this is your lower high, then lower low, then lower high, then we expect a lower low. So now we expect a lower low. What do we have to do? We First of all we should be thinking is sell, because now we're in a downtrend. This is a downtrend. The market is going down. We're no more looking for buys, we're looking for sells. The market has made a market shift, and these are our break of structure. This is a confirmation that the market is really going down. And we have another break of structure here. No, I don't think so. We don't have a break of structure here because the market is still here. So let's delete this for now. So this is our break of structure, meaning these are confirmations already that the markets are really going down. This is your market shift, and this is your break of structure. The market goes up, caused a break of structure just to make a lower low. And this right here too is your lower low. This is your lower high. And this right here is your lower high. So the market is at this point right now. We expect the market to break, but the market is at this point right now, still on the process of going down here. So let's go over to the smaller time. Now we know that we're in a downtrend. All we should be thinking is sell. So let's go over to the smaller time frame just to find sell opportunities. Now we're going over to the 15 minutes time frame. This is your 15 minutes time frame. So here we are at 15 minutes time frame, and the candies are so tiny, but we have to. So if you see right here, we had lower low, lower high, break of structure, but these are just minor change. These are just minor market shift. These are not real market shifts. So we always should be thinking is sell positions. So I'll take an example from here. If we had sold from this point, that would have been a whole lot of profits. Let me show you that. If we had sold from here on our stop loss below here and our take profit down there, this would have been our profits. This would have been our profit because the market is going down. All we should be thinking is sell. And if we had sold from this point, this would have been our profit. We just made good profit on this trade. Alright, this is a bit choppy. I think we should move over to the 5 minutes time frame. This is your 5 minutes time frame. We are in the 5 minutes time frame. So as you can see from this point, the market made this. That's after a consolidation. This is a consolidation. This right here is a consolidation. This right here is a consolidation. The market just moved sideways. So from this point, the market made a mini downtrend here, and it's going down. So what are we gonna do right here? We're looking for sales. So when are we looking for sales? We look for sales at least when the market makes a retracement. When I mean retracement, I mean this retracement. At least the market comes to this point. Then we can look for sell positions, because the market made this mini downtrend saying lower high, lower low, lower high, lower low, and then we'll wait for a little lower high before we could enter for a sell position around here. Stop loss above the recent lower high, then take profit, let's say 3 risk ratio. This is a 15 pip stop loss. 1.5. This is a 15 pip stop loss, and we're making times 3 of this if the market comes our way. So what do we expect from here? We expect the market to go down, retrace a little bit, and then this is what we expect the market to do. and then smash our take profits. So this is what we expect the market to do. And if you remember, we went to the bigger time frame just to see the direction of the market, and we've seen that this market is in a downtrend. You understand? So this market is in a downtrend. We went over to the smaller time frame, which is the 5 minutes, to search for sell positions. As you can see, we had a consolidation here until the market started making reasonable trends. So we expect the market to move lower, then retrace a little bit, and then we enter for a position here, a sell position. And then this is what we expect the market to do, creating lower lows and lower highs to the downside, smashing our take profit. So this is how the market moves in the real charts, making higher highs and higher lows in an uptrend, lower highs and lower lows in the downtrend. So my advice for you is that you should try analyzing the market more often, more from time to time. You should try analyzing the market so you get used to how the market really moves. Now, if it's in an uptrend, you know, bigger time frame, go to the bigger time frame. Spot if the market is going up or down, then go over to the smaller time frame to take in your positions. So you should do this from time to time so you get used to it and start trading and make money. So this is how we make money here. This is how we make money, by predicting the market. We are predicting the market if it's going up or down, and then we sell or buy. So that's all for this video, and I'll see you in the next one. Peace out.